Hi, my name is John Crane, and I wanted to do a quick video to answer some questions. I've had a lot of phone calls and a lot of emails with questions on how action reaction theory and our market timing intelligence would have handled the almost historical drop in gold and silver that occurred back on the 12th through the 16th of April. So I thought I'd kind of film this short video to walk you through our projections, our time and price and projections, show you how the market timing intelligence did handle the drop. So here we're looking at a daily chart in the silver. You can see right here we have moved out, market dropped out of this zigzag pattern here. As you know, the zigzag pattern is how we use to identify the center of the cycle. You'll see one right here and one right here that identified the low of this cycle, but we have a new one forming here. I do have arrows pointing, these are reversal dates or reaction dates that were projected from past action and marked on here. Especially this one right here. You can see the market broke out, came down and formed a new reaction swing. From here, moved up into the red line, which of course is a 20-bar exponential moving average, but we use it a little differently when we're identifying reaction swings and for signals here. And the market moved up into a projected reaction day, so it did turn into a reversal day, turn the market lower. We also had the inside bar right here, which is another market tell that tells you this corrective pattern was getting ready to end and it came up into a resistance area. So really we triggered a sell based on this reaction swing signal pattern right around about the 27 on the silver. And now I'm going to start making my longer term projections by putting on the pitchfork, the Andrews pitchfork. Looking of course at the center line and the lower parallel line, the first thing we want is there's a high probability this market's going to move down to the center line. That's kind of initially what we're looking for, but now I want to start getting a little more shorter term, so I do add another pitchfork using this pattern right here. So like I said, this was the center of a cycle, this is the center of a cycle, so we're using it. Notice how the two lines converge right here. This is kind of like a magnet that may bring the markets down. You'll see it does it right here, but this one occurs first, and that's down near the 22 area. Now that looks like it's a long ways down, but we want to start doing our reverse forward count to make our time and price projections. And when I do that, we came up with a reaction day on right here. I believe that was the 17th, which was a Wednesday, April 17th, Wednesday. And here is the green line is a reaction line target objective. That is our target objective. Notice how they all come together. So there's real confluence of support here, support here, support here. It's kind of like a magnet. It's going to pull it down into here. So, and we should look for the market to go down into the 17th. See, that's what happened. The market did collapse. Came right down to this area, right where we projected. It did hit the line one day before the projected reaction date. So we have completed our cycle. Also, we're a long ways away from the red line here. So when you get too far out of line because price has exceeded time, the market's going to seek balance. And the way it seeks balance is it's got to retrace. It's got to pull back. First objective is the median line right here, but it's also got to come up near this red line. They have to come together. You can see that's what happened. The market did retrace back. First it did hit this median line, and also we're coming very close to the red line. And you can see there's a red arrow there and also this green line because that is another reaction date. The market's moved up into that, which means there's a high probability this market's going to turn lower. Now I'm doing this video on Friday, early Friday, April 26th. You can see the market's moving up into this reaction day, which tells me that we probably will get a reversal either by the end of today or watch this market on Monday, the 29th, to see what happens with the silver. I'm looking forward to try to push back down again. Now real quick, I'll show you how I came up with these dates right here. First of all, I'm using this reaction swing right here. Here's the low close. Hopefully you can see it. Here's the high close. As you know, that's the balancing point. So now what we're doing is we look into the past. We come back to this high close, and then I go further to the high close, the low close, I should say. This is the action segment. We use this to make our future projections, the reaction to the market. And I just use these boxes to illustrate it, to make it a bit easier to show you. So when I move it over and I do the projection, this is the end. So this is the beginning of the reaction swing. Here's the end. We project out. That's how we got the 17th as a possible reaction day. And then I'm going to use the next one to project out. That takes us out to the 26th as a possible reaction day. Switching to the gold real quick. Same thing. Here is my swing pattern. This is the zigzag pattern. This is the balancing point, the center of the cycle. So I'm going to use this information going back into the past to make my futures projections. Pretty much like the silver, you dropped out of this here and we formed the very first reaction swing, a low close here, came right back up to the red line with a high close. Here's your reaction swing. The market came down here. It had a 3 close reversal, so it really triggered a sell signal right around the 1550 in the gold. So real quick, I'm going to do my reverse forward count. I'm going from this low close. I'm going to go back to this low close first, and then I'm going back to the high to make my future projections. So when I move it over here, I'm projecting from this high close, come out here. This gave us a projected reaction day. This also happened to be on the 17th of April, which is a Wednesday. And then we had this projection out also for a futures. And that happened to be the 22nd. It moves out to the 22nd. So right now, so we have our time projections. We're looking for this market to move lower into the 17th. And we'll see after that if it's going to go higher into this date or lower into this date. So let's see how it handles that first objective. So now I'm going to make my price projections by using this line right here. And I'm going to come down. I'm going to draw a parallel line right on here. And actually what I did is I started out right here and then I moved it down to this area here, right where this projected reaction day crosses the lower parallel line for reasons I'll explain here in just a minute. I'll tell you why we brought it down, and then also did the exact same thing with this reaction date. So now here is our target objective right around the 1350. So we're looking for the market to move down in this date, down in this price period. Now the reason we had the line right up here, but when it crossed right here, that means we drop it on down to the parallel line. That it tells you you can extend your target prices. And the market did come down. It actually hit 1327, and it did that on the 16th, one day before the reaction line. So time is, I should say price is ahead of time. So we're looking for it to regain. It's got to get back into balance. This first target, we're looking for this reaction line here and up to the red line. And here we are moving up. We're moving up. This is the 26th. So it came up to the red line. This was the previous reaction date, and you see how the market touched? It did go up to the median line as you expected, and then it closed lower on this reversal date. A lower close said the market will turn and head higher. Did exactly as we expected. Moved up here. We're into, this is early on the 26th. It has met its objective, so I wouldn't be surprised, and I would actually look for gold to start trading lower from here. Like I said, this is Friday morning. Look for it to close lower on Friday and into Monday. We'll talk about this again in our Thursday's webinar. So if you haven't signed up for them, they're free. There's a link on this email that you can find it. So hopefully that answers your questions. Hopefully that helps.